Hello, good evening, welcome. The show is India Tonight and I'm Vikram. Every weeknight you join us here on ET Now at 8 o'clock in the evening, and here we give you a lowdown on the day. We get you the insights to the biggest news stories of the day. So among the biggest news this evening is the future of the telecom sector. Now that 5G rollout is all set to happen, the question is about tariffs and tariff structures. Are we ready to shell out higher tariff plans and perhaps a more complex, a pay-as-you-go model as well? The sector in India doesn't have too many players. Airtel and Vodafone are on one side of this debate. They're all for higher, complex tariff plans. Not so much Jio. We'll bring also the consumer side. Our guests are joining us on the show for this discussion. Also, we'll explain why Dubai is rising the investments, Indians included. And amidst the expansions that we're looking at, just consider what the Inox PVR merger is building. If the spanking new 11-screen multiplex in Lucknow is multiplex hall emerging from the shocks of the pandemic, and we are going back to the cinema halls for our entertainment. More on that from the PVR Chairman and Managing Director Ajay Bijli is coming up. But first, here are the headlines on India Tonight. In the Indian markets, the Nifty is finally snapped out of that 8-day losing streak. 45 stocks clocking gains, the metal index emerging as the top sectoral gainer. Adani Enterprises stock has rallied as much as 15%. Motilal Oswal Financial Services Ramdev Agarwal says that India's is a terrific story. There's no point betting against it. He also believes that the Indian market can see double-digit growth in the terms of the next 10 years. Bajaj Auto's exports for the month of February have jumped 13% month-on-month, while Escorts is expecting demand momentum. Maruti sees minor impact from the shortage of electronic equipment, but Mahindra & Mahindra is seeing a great response to their SUVs. The company is selling more than 30,000 off-roaders per month. The GST collection for February has touched almost 1.5 lakh crore rupees. It has stayed above the 1.4 lakh crore mark, and this for every month, and this also for the past 12 months now. Has unveiled its shiny new 11-screen multiplex in Lucknow's Lulu Mall. The Chairman and Managing Director Ajay Bijli says that synergies from the Inox deal will yield around 225 crore rupees over the next 12 to 18 months. First up, let's talk about the action on the large street. Finally, markets have managed to snap that losing streak after 8 straight sessions of ending. The Nifty has surpassed that 100-day moving average. The DMA now has shut shop above 17,450, and the Sensex too has gained. It's gone up around 450 odd points. The broader indices mirroring the benchmarks, closing with gains today, and sectorally, we've seen 14 of the 15 constituents of the Nifty do well in trade and have gained as well. The PSU Banking Index has gained for the third straight session. Among the gainers, you saw auto stocks, you saw banking and energy stocks. All of these were beat in trade.
A day of a comeback for the equity markets as we scaled the 17,450 mark with conviction. The Sensex gaining about 448 points, and the broader markets, mind you, outperformed. That breadth skewed favorably in favor of the gaining side, and really it was metals that stole the show in today's trading session. But have to give credit to sectors across the board because you did have support coming in from banks, IT, the real estate basket as well that held out quite comfortably in trade. In terms of your top movers, it was the Adani group of stocks that really stole the show. In particular, Adani Enterprises with a comeback of a solid 14%, but Adani Ports, Wilmar, etc., the entire cluster was active. Hindalco, etc., kept JSW Steel, Tata Steel kept the entire metals basket active. You had Axis Bank, IndusInd Bank, those were some of the frontline names within the banking cluster that held out. And then TCS, Eicher Motors, those were some of the other smart movers. Literally a handful of stocks in the red, including Britannia, Power Grid and Cipla. Within the broader markets, lots of fervor being witnessed across the board. Apart from the Adani Group, there was Dish TV, Uflex, Rain Industries, Minda Corp, Vakrangi, Sanata Software, Hindustan Copper. You had the entire auto cluster that was in focus on the back of the auto sales numbers and something like a delivery on the back of that block deal that took place. Some of the losers, Sobha, Sheela Foam, Bajaj Consumer, IRB Infra, as well as Britannia. But all in all, a fairly decent pullback that we witnessed in trade today, above the 200 DMA.
All right, Avan, thanks very much. This gives us a sense of what happened in the markets today. And also, we'd like to apologize in the beginning. I believe you couldn't hear my voice clearly. And of course, now we are trying to rectify that. We hope you can hear us loud and clear. Meanwhile, Airtel. Now, Airtel wants to increase your monthly cell phone expenses by at least 50%. Those bills could be higher. Chairman of the company, Sunil Bharti Mittal, is hoping that tariffs will increase this year. And he's saying that no one is complaining because salaries have gone up, rents have gone up. But he says cell phone users are not shelling out the money just yet. Now, Airtel's average revenue per user, the ARPU of Airtel, is about 190 rupees. Its target is to take it all the way up to 300 rupees. In fact, Bill Gates has said that India is going to have the cheapest 5G services in the world. Electronics and Information Technology Minister Ashwini Vaishnaw has noted the kind words coming from Bill Gates. But the question is, will it be wise on Airtel's part to raise tariffs, especially when Jio's revenue per user is already way below Airtel? So what does it do to the competition? And how will a price hike actually affect India's dream of taking these digital services to the poorest of Indians? We're going to discuss all of this. But first, here's what the Minister, Ashwini Vaishnaw, has said to my colleague, Samir.
During the G20 conference here, one of the events here, Mr. Bill Gates was very kind. He talked about India's public digital infrastructure, the digital India that Honorable Prime Minister Shri Narendra Modi ji has created, and he also endorsed India's speed at which India's 5G is being rolled out, and he said that India's 4G, 5G network is among the best in the world and lowest cost in the world, and that has really helped inclusive growth in the country.
So is India ready for a tariff hike? That's the question. How is this going to play out? And now with 5G actually rolling out, what does this mean as far as pay-as-you-go goes for consumers? And how does it really work out for corporates if that is going to be a complex, more layered structure? Let's find out and ask our guest tonight. Nikhil Pahwa is the founder of Medianama, who's joining us on the show along with Mahesh Uppal, the director of ComFirst, and Pranesh Prakash, the tech policy consultant, also with us here on India Tonight. Great to have you all with us, gentlemen. Mahesh Uppal, to you first. Do you believe that our mobile bills are way under par compared to some other emerging markets, what they pay for call and data usage? I mean, if you believe that this is the case, that we are really underpaying and our bills should be higher, explain to us the reasons and how much has it affected the profitability and margins and ARPUs of India's telecom sector so far?
Rates being lower than emerging markets, I mean, that's simply a data point. I think that's true. Our rates are lower. Whether this is something that should be higher and by how much is, of course, the issue. It is true that currently, given the low prices, more and more people can access it, and that has been a great success story for us. But how much elasticity there is in this market, we will know only after people attempt to raise prices in a significant manner. I do not believe that the elasticity is so high. Indian consumers are known to be very, very price sensitive. So I'm sure the operators will tread carefully when they attempt to raise prices very, very steeply. But having said that, I do believe that the next few months will see prices rising and the operators will test the waters to see how far they can take it. Yes, I do believe that the company's profit margins are, by many standards, not, or put it differently, their returns on their investment on telecom services are not the highest in the world, and clearly there is a desperate attempt by the companies to raise this, but they will have to be careful. It can be counterproductive.
Right. So Mahesh Uppal is talking about this being necessitated at this point in time because they have been pushed against the wall. Nikhil Pahwa, do you agree with this? We're at the onset of 5G in India. The consumer is perhaps ready, perhaps not, for a pay-as-you-go tariff structure as well. But how much higher is the question? What are the implications that you see of a higher tariff plan at this stage in our lives?
Well, Vikram, if you go back to 2015, we used to pay 250 rupees per GB of internet access on 3G. And that time it wasn't a competitive market. There was basically largely a cartel of Airtel, Idea, and Vodafone that used to dominate the market, and they would increase the prices together quite often. Right? It's Reliance Jio that has changed India's telecom landscape by bringing prices down. Now, average revenue per GB is at about, for telecom operators, about 10.5 to 12.5 rupees. But more importantly, what it's done is that Indians are using more than 15 GB per user per month. Now, if they want tiered users, let them bring it, and let's see how competition plays out. Will Vodafone, will we and Airtel survive if they go to 300 rupees ARPU and Jio keeps prices low? Many consumers will switch. If they're willing to take that risk, let them take that risk. I think it's an open market. We have so much data because there's competition, right? And frankly, telecom operators, Airtel has still survived this decline in pricing, right? They have, their user base has increased, their internet user base has increased, their revenues not done badly, their profitability may have been impacted, but they're still surviving. So I don't see why one should be afraid of that of the impact that it will have on telecom operators. I don't think it will. They want to do better for their shareholders. Fine, let them be open to losing customers. Another interesting thing was that in the earnings conference call, Akshay Mundra, the CEO of Vodafone, of Vi, talked about telecom like a public utility. And it's interesting because in the US, telecom operators have fought this idea of being called a public utility because it would meant that they are regulated differently, that the regulations on them are far more onerous. Their pricing, et cetera, is controlled, can get controlled by the regulator in India if they get treated like public utilities. If they want to open them up to that, themselves up to that risk, let them do that. From a consumer perspective, I think it's never been a better time to be a consumer. But let's not forget that the internet growth in India has been slowing down. We now have single-digit growth. We have around 890 odd million internet connections. The urban India has got 130% telecom penetration. Rural India is still at about 30%. Right? So there's a big gap in rural India. And if we really want the value of digital India to reach rural consumers, then prices have to remain low. And so let's see what the government will do if telecom operators start threatening to increase prices, because it will largely become unaffordable in rural parts of the country. And I don't think that will serve digital India as well.
Correct. And that's a big push.
So let's see how this battle plays out.
That is indeed a big push. Pranesh, how effective has our telecom policy been in India, in fairness to the companies in the telecom sector and the consumers that they serve, in helping business grow and yet drive deeper for that push for digital India to get a leg up with lower bills so that more people are covered in the ambit of technology? How have we done?
Good enough so far, but how much TRAI believes it has to step in is yet to be seen. So just to lay the scene, TRAI does have extensive powers to, for instance, control pricing structures and the kinds of plans that are offered by these companies. And so far, TRAI, at least when it comes to different kinds of pricing models, such as tiered-based pricing or pay-as-you-go pricing, it hasn't made any comment about them, and those seem fine. So it does seem likely to me that we will see Vodafone and Airtel going in for such pricing mechanisms. But whether they can still control any of the market share, given mobile number portability, given the ease of shifting between one telecom provider and another, is yet to be seen. And one thing that TRI should be on the lookout for is whether multiple companies are working together as a cartel in to push various kinds of changes in revenue models, in pricing models, and so on, because that is something that would be anti-consumer, is something that would harm consumers, whereas having a diversity of pricing models per se isn't necessarily something that harms consumers. And but of course, rising prices at the absolute level does harm consumers. And as Nikhil very rightly pointed out, there is a big gap between rural India and urban India in telecom service uptake. And as Mr. Uppal pointed out, there is the question of how elastic is the demand from consumers. Will they still carry on in terms of the amount that they download once the prices goes up? Will they still, for instance, will they radically cut down in places where
Sure.
it becomes more unaffordable?
Yes.
And that's to be seen yet.
Let me take that across to Mahesh Uppal, because you did mention about the elasticity, whether the demand is elastic enough for some of these companies, which where we find in the competitive landscape, Mr. Uppal, you have two companies that are on one side of the debate that are favoring a more, perhaps the pay-as-you-go model would be a slightly more evolved model. Do you think that these tariff hikes and a more evolved model of tariffs is something that you're going to see more of the cartelization that we saw in the past that Nikhil was alluding to?
My own sense is that, in fact, that's also been mentioned indirectly. I don't think it's going to be easy to move to a pay-as-you-go model, even though there can't be any opposition to people attempting it. Because I think, particularly in the stage of development that we are in, users looking over their shoulders whether they've actually exceeded what their budgets were for use of the mobile data would not be a very good thing. So I think the fact that we have models which actually are a flat rate kind of a model is actually been very useful. It's been something that has helped catalyze demand, which clearly all of us want. So it is something which may not help, and certainly may not be easy if Jio continues with its current approach to pricing. So moving to a pay-as-you-go model will require all players to be on board. Otherwise, as Pranesh also mentioned, the chances of people just changing their operators are very high.
That's true.
If I find that, if I'm counting my minutes of usage of bits of data that I'm using, then clearly that's not going to be fun either for me or for the company that I'm going to be a subscriber
Yes.
of.
Nikhil had a point of view. Do share.
Used to have a pay-as-you-go model many years ago,
Yes.
even in case of dial-up internet access and
Yes.
early days of telecom, right? And my question really is, do we want to go back there? I don't think we do. I don't think, and as long as there's competition will always move things towards consumer interest. There's one other thing that the telecom operators have been talking about outside of this debate, which is the sender party pays model, which what they're saying is that, let's say, services like a Paytm or a PhonePe or an Ola or an Uber or a Netflix or a YouTube or a Facebook, that are large internet companies that users tend to use a lot. They're saying those companies should pay for setting up telecom infrastructure in the country, and therefore they should be paying telecom operators to allow them to use these services. That's something I believe the TRA is considering. It's something that's also being looked at in Europe. But frankly, that would be a violation of net neutrality in India. Um, we heard this when the telecom bill came out in November last year as well. The telcos were demanding the same thing. I was on a show here discussing the same issue. And so all of this would be a violation of net neutrality. We need to be careful that from a policy perspective, we don't go back there, because that would basically hurt Digital India even more than moving to a tiered structure or a pay-as-you-go model.
Fair
which
enough.
I know and you
Yes.
know that it's unlikely that we'll do that.
Correct. But clearly, I mean, a new model of tariffs will have to be found if the companies have to find themselves in a more sustainable fashion. And of course, consumers as well, they have to be kept happy. At a policy level, we want to make sure that Digital India, that dream of getting more and more people in the tech ambit, that dream is realized. All of it, we'll have to see how it unfolds with 5G now all set for a rollout. Nikhil Pahwa, Mahesh Uppal, Pranesh Prakash, thank you very much for joining us with your perspective on this edition of India Tonight. The debate is definitely going to continue on the subjects that we are raising. With that, we'll take a very small breather on this edition